If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today is June 17, 2020, and today is Wednesday morning. So looking at the highlights of the day, Apple stock rocks the markets higher yesterday, pushing the indices higher. But first, let's take a look at the economic events of the day. So we only have one event happening today. It's a continuation of yesterday's Fed Chairman Powell testifying in front of Congress in relation to his rate decision last week. Now, if those of you who remember last week, he made a comment that shed the markets 3,000 points on the Dow Jones. Okay, he kind of mentioned that the unemployment would stay above 10%, and the markets were rattled by that. Now, we've rebounded a little bit since then. But first, looking at the markets, we're watching the currencies, the euro steady versus the dollar, while the Canadian dollar retreats to support together with the South African rand. I'm going to just show you that in a moment. Now, looking at the Dow Jones, it continues to forge higher. We got to 26,400-ish level after gapping up yesterday and continuing higher. Now, the NASDAQ is inching closer to that 10,000 point mark, which is an important mark for the NASDAQ. Now, looking at the commodities, gold bounces where all pushes higher, but takes a little bit of a retracement back. So that's a little bit of a volatile market there in relation to OPEC Plus, mentioning whether or not they're going to cut output. Now, looking at the stocks, lastly, we're watching Apple sitting at its all-time highs and pushing the markets higher. But we're going to take a look at the markets and see what we can expect from today's trading. So we're going to first start out with the Euro USD on a weekly chart. You can see that we're at that upper limit, but not doing much here. Okay, we're really just close to that upper limit, retracing at 1360. That's still our resistance-ish level. Now, if we look at a tighter range, okay, if we look at a 1 hour chart, you see we're really in a tight range here, 1340 to 1270-ish. It's still a 70 pip range, but with that, okay, we are at that bottom of the range and looks like it wants to take it higher. Now, looking at the GBP USD, we retraced a little bit more significantly here and didn't push that to the 127-ish level, but we're bouncing right here as the dollar gets weaker in anticipation that the Dow is going to continue forging higher. Now, looking at the USD ZAR, we retraced here at 1726. We rallied all the way up there, but we're now retracing that. That would be a decent entry, okay, for the anticipation that the dollar is going to get weaker versus the rand at this area. Okay, so a very important area for it to really get weaker at this upper limit. Now, what's very encouraging here is that the USD CAD is doing the same thing. We retraced a little bit here down to its 135-ish level and getting a little bit stronger versus the dollar as it's making that correctional moves. Now, jumping into commodities, we're looking at gold here, continuing to be at that upper limit, 1727 to 1740, but not forging higher, okay? So if it does get closer to that 1740, maybe it'll finally break it on the upside, in anticipation that the markets are going to be making some sort of rotation, okay? But right now, I don't see that happening. It's more inclined to actually sell off at these levels, okay? But I wouldn't jump into it in either direction just because it's really in that mid section, okay? It's not in the upper limit or the lower limit at all. Now, looking at oil, this is something very interesting. We retraced about $1.50 yesterday from 38.95 down to 37.55, and now we're bouncing above. A nice little rally that we had from 34 up to 38, which is decent volatility for this time of the year, okay, trading in the summer, but it's choppy, okay? There's very little follow through here. Okay, what is interesting is the Dow Jones. Once again, we're rallying this morning to 26,337. Now, we do have this resistance at 26,300-ish level, so just consider that if we go into that later today and this doesn't push further higher, okay, it makes some sort of correctional move. So remember, the yellow moving average right here is a 200-day moving average, okay? So ostensibly, if it doesn't maintain above it, then it's overbought. Okay, so something to consider later today if the stocks are not following through with the futures. Okay, what's been happening is that Apple's been pushing the markets higher and all the other stocks are reluctantly, pushing higher. Okay, and we'll take a look at that in just a second. Now, first looking at NASDAQ, it's close to its all-time highs. Okay, coming very close to its 10,000 point. We're just trading right here at 9994. Okay, so it is pushing it higher and getting closer to that 10,000-ish level. That psychologically is a very important number. Now, why is it pushing it higher? Well, because of Apple. Apple pushed to 350 yesterday, and I think it's going to try and take out that previous high of 353. Now, if it doesn't, okay, if it falters at that 353, then I expect the markets to recoil and make a correctional move, because it's Apple that is the only one that is making new highs. Okay, if we look at Amazon, it's close to its highs but not making new highs. If we look at Microsoft, again, it's close to its highs but not making new highs. So unless there's a rotation, unless some of these other stocks like Amazon or Microsoft don't pick up the pace, then we'll see a correctional move. However, okay, that's one scenario. The other scenario is that Apple recoils and doesn't push higher. We'll see a correctional move on the downside. Okay. However, if Apple does continue to push up higher, then I think the other stocks are reluctantly going to go up higher as well, and the markets are going to go higher. Looking at Facebook, also didn't push higher, but close to its all-time highs. So markets are still strong relatively. Okay, relatively speaking, they're still very strong. Looking at Google, also not breaking out to its all-time highs. The only one that's really that close is Apple, but it's got to follow through. It's got to push higher if we're going to see that follow through. Now, we're still in the corona environment. Okay, there could be a second wave, a third wave, and it looks like it's happening. Okay, but until that's confirmed and until there's going to be a second lockdown, I think the markets are going to still stay somewhat timid in this situation. So just be aware of that. And I can't emphasize this enough. You want to keep your stop losses at a minimum. Okay, the markets are very volatile these days. This is Fred Razak. I want to wish everybody a great trading day.